The Strait of Hormuz, Iran's chokehold that could backfire. As tensions flare in the Middle East, Iran has threatened to shut the Strait of Hormuz, a strategic maritime choke point carrying nearly 20% of global oil and gas transit. But while such a move could send shockwaves through world energy markets, it also risks crippling Iran's economy, destabilizing regional relationships, and triggering a robust international response. Why Hormuz matters. The Strait of Hormuz, a slim 2133 kilometers waterway separating Iran from Oman, serves as the singular sea route for oil exports from Saudi Arabia, the UAE, Kuwait, Iraq, Bahrain, and Iran, as well as Qatar's liquefied natural gas. In 2024, nearly 20 million barrels per day passed through it, supplying 20% of global oil demand. Alternatives, like Saudi pipelines and the UAE's Fujairah terminal, offer only limited relief, capable of rerouting roughly 2 to 5 million barrels a day, a fraction of Hormuz's volume. Iran's threat, symbolism versus self-harm. Following US airstrikes on Iranian nuclear facilities, Iran's parliament approved a proposal to close the strait, pending Supreme National Security Council approval. But this threat, say experts, carries significant risks. Self-inflicted economic damage. Iran depends heavily on Hormuz for its own oil exports and imports of vital goods. Its alternative terminal in Jask has had just one loading run and is woefully under-equipped. Alienating allies. Export partners like China, which buys tilled 47% of Gulf oil via Hormuz, and regional mediators like Oman would be directly harmed. Insufficient replacement infrastructure. Even with east-west pipelines and Fujairah routes, capacity is well below the strait's throughput. JP Morgan analysts warn such a closure is economic suicide for Iran. Global impact, prices, inflation, and response. Energy markets. Blocking Hormuz could send oil prices surfacing to $120, $130 per barrel, dealing a blow to economic growth, fueling inflation, and jolting global markets. Affected consumers. Asia, heavily reliant on Hormuz for 84% of its oil imports, especially China, India, Korea, and Japan. US, relatively insulated with only 7% of its oil entering via Hormuz. Market signals. Following Iran's missile strike on the US base in Qatar and ensuing ceasefire signal, oil prices actually declined nearly 7%, signaling investors' confidence in restrained escalation. International intervention. History shows the US and allies will rapidly respond, most notably the 1980s escort flotilla during the Tanker War. Analysts predict any closure would be temporary, reopening in hours or days, with possible cooperation from Europe and even China. Regional security dynamics. Iran's arsenal includes missiles, naval mines, drones, and fast boats capable of disrupting Hormuz traffic. US Fifth Fleet in Bahrain, along with European naval partners, maintains patrols to counter such threats. Still, mine clearance remains underfunded, presenting tactical vulnerability. But Iran's leadership remains cautious. Senior lawmakers note closure would only be authorized if vital national interests were at risk. Diplomacy over door sealing. Global powers are urgently advocating restraint. US Secretary Rubio labeled closure economic suicide and urged China to influence Iran. China supports de-escalation, with growing strategic energy inventories able to buffer near-term disruptions. Gulf states like Oman could find themselves caught in logistical and diplomatic crossfires. Analysis. Why closure might backfire more than bite. Factor potential consequence. Oil revenue loss cuts off Iran's own exports, harming its budget. Horsegate pressure. Beijing may intervene as China relies on river flows. Military reprisal. US allies' naval action likely swift and overwhelming. Diplomatic backlash would strain ties with Gulf partners like Oman. Fragile alternative. Jask and pipelines insufficient to fully replace Hormuz. Outlook. Posturing over permanence. Short term. Iran may escalate maritime harassment, mining, drone swarms, erratic navigation interference, but a full closure remains unlikely and brief. Medium term. Diplomatic channels via Oman, China, EU, and the US are likely to prevail, preserving flow while signaling Iran's defiance. Long term. Iran appears to rely more on asymmetric tools, proxies, cyber attacks, shipping disruptions, than on permanently severing its own lifeline. The Strait of Hormuz embodies Iran's power to unsettle global energy markets, but closing it is a high-stakes gamble. Tehran stands at a crossroads, threatened to dominate headlines or stoically avoid self-harm. With economic self-interest, international maritime law, military deterrence, and diplomatic safeguards in play, a blockade remains more a strategic bluff than a sustainable option. The world watches closely for moves that could sway markets, define alliances, and reshape regional balance.